Have you ever found yourself staring at a flickering screen at 2 a.m., watching a green line climb higher and higher, while your heart beats with a strange, frantic rhythm? It's that nagging voice in your head whispering, "Everyone is getting rich except you. You are a rational adult. You've worked hard for your savings. You've seen scams before." But in this moment, your logic feels like a fragile paper shield against a tidal wave of adrenaline. Today, we aren't just talking about a market trend. We are diving into the glitch in human evolution that causes us to gamble our children's tuition or our retirement funds on a whim. Why do we leap into the abyss, even when we can see the bottom is covered in wreckage? But here is the chilling part. The more successful you are in your career, the more vulnerable you might be to this trap. To find the answer, we have to look past the numbers and go deep inside the human brain, where a silent hijacker is waiting to take control. In the world of psychology, money isn't just currency, it's a symbol of security and status. When you see a golden opportunity passing you by, your brain doesn't use its logical center, the prefrontal cortex. Instead, it activates the amygdala, the primitive part of the brain responsible for our fight or flight response. For our ancestors, being left behind by the tribe meant certain death. Today, that ancient survival instinct is misfiring. Your brain perceives missing a trade as a threat to your very survival. Look back at 17th century Holland during the Tulip Mania. People traded family estates for a single flower bulb because the amygdala screamed so loud that logic vanished. They weren't buying flowers, they were desperately trying to stay with the herd. But biology is only half the story. The trap becomes truly dangerous when we look around and see everyone else running in the same direction, leading us into a psychological phenomenon known as social proof. If you see 100 people running toward a door, you don't stop to ask why, you start running too. In the digital age, this herd mentality is magnified 1,000 times by social media groups and insider tips. Once you've developed a crush on a specific investment, your brain starts filtering information, a phenomenon called confirmation bias. You seek out the moon predictions and ignore the warnings. We saw this clearly during the dot-com bubble of the late 90s. Even brilliant fund managers followed the crowd into companies with no profits, simply fearing they would look incompetent if they stayed behind. The herd is usually right at the beginning, but they are always wrong at the exit. And this fear of being wrong, or rather, the fear of living with regret, is exactly what can cause even the most brilliant minds to crumble. For those of us who have built a life and a career, the pain of "I could have been rich" is often sharper than the pain of "I tried and failed." Even the great Isaac Newton fell for this. He jumped back into the South Sea bubble at the peak and lost everything, famously saying, "I can calculate the motion of heavenly bodies, but not the madness of people." You might think we've learned from Newton's mistake, but history doesn't repeat, it rhymes. And right now, it's rhyming with the sound of gold and silver prices hitting record highs. Look at the market today. Gold and silver are surging. You see people lining up to buy, and that familiar itch returns. But remember, when the media is shouting, the price you pay often includes a massive FOMO premium. Investing because of fear is not a strategy, it's a reaction. When we are in deep, we fall for the sunk cost fallacy. We double down on a losing bet just to prove we weren't wrong. At that point, we are paying a pride tax with our own life savings. The truth is brutal. When you enter a market because of FOMO, you are usually at the end of the food chain. You are providing the exit liquidity for the people who bought in months ago. FOMO creates chronic stress. After nights of sleep deprivation, your decision-making capacity collapses. You buy at the peak out of euphoria and sell at the bottom out of pure panic. Before you decide to follow the crowd, ask yourself, are you prepared to pay the price that isn't listed on the stock exchange? Because for an audience of our age, this isn't just a number on a screen, it's about the very foundation of our security. For us, losing money means losing time. It's the time you'll have to spend working instead of being with your family. FOMO trades your long-term peace for a short-term hallucination. So, should you invest in gold or silver right now? The answer depends on your method. If you're jumping in out of fear, stop. What I'm about to tell you is the difference between those who get rich on paper and those who stay wealthy in real life. If you choose to move forward, you must replace impulse with a calculated system. First, use dollar-cost averaging. Buy small amounts at regular intervals to smooth out the volatility. Second, define your purpose. Is this for protection or speculation? And third, know your exit before you enter. Real investing is boring. It's calculated. If your heart is racing while you buy, you're not investing, you're gambling. In the world of wealth, the winner isn't the fastest or the smartest, it's the one who controls their own instincts. Don't let the fear of missing out cost you the life you've already worked so hard to build.